Good day and welcome to the Capri Global Capital Limited Q3 FY24 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravikant Bhatt. Thank you and over to you, sir.
Hi, good afternoon everyone. This is Ravikant. I shall read out a brief disclaimer for today's call. The discussion on today's call regarding CGCL's earnings performance will be based on judgments derived from the declared results and information regarding business opportunity available to the company at this time. The company's performance is subject to risks, uncertainties and assumptions that could cause actual results to differ materially in future. Given these uncertainties and other factors, participants on today's call may observe due caution while interpreting the results. The full disclaimer is available on slide 43 of Q3 FY24 investor deck. Participants are requested to note the same. And I request our MD, Mr. Rajesh Sharma, to present the opening.
Good afternoon, friends. Let me start by wishing you all a happy new year 2024. We declared our reviewed consolidated results for Q3 FY24 on Saturday, 27 January 2024. I hope you had a chance to go through the investors' deck. We have a lot of updates to share on today's call, so my opening commentary today is going to be slightly longer than usual. I would like to start by highlighting a few key decisions that our board approved in its latest meeting. CGCL's board has approved a stock split from rupees 2 face value currently to rupees 1 face value. The CGCL stock had last split in November 2016 from rupees 10 to rupees 2 face value then. The board has also approved a bonus issuance in the ratio of 1:1. The company's paid-up equity share capital shall increase from rupees 412.5 million in Q3 FY24 to rupees 824.9 million after the split and the bonus issue. The outstanding equity shares shall quadruple from the 206.23 million shares to 824.9 million shares. These measures shall aid in improving our liquidity. Both split and bonus issuance are subject to shareholder approval. We have already published the notice for an extraordinary general meeting of our shareholders to be held on 22nd Feb 2024 to seek approval for stock split and bonus issue. We have also appointed 3 distinguished leaders from the field of finance, technology and ESG as independent director on our board. They are Mr. L.V. Prabhakar, a career banker and former MD and CEO of Canara Bank, Mr. Shishi Priyadeshi, former IAS officer and a director on the World Trade Organization, having a distinguished public servant and a wide-ranging experience across all disciplines, and Ms. Nipur Mukherjee, former Global Managing Director at Standard Chartered and also at Barclays Bank with deep experience in critical technology, data science practices and ESG. The detailed profiles are available in the leadership section of our website. Please do refer to those. These appointments have added significant strength to Capri's board and the executive management will immensely benefit from its guidance. I would like also to inform that our newly incorporated wholly-owned subsidiary Capri Loans Car Platform Private Limited became operational during Q3 FY24 and has begun accruing income. In due course, the car loan origination and business shall be conducted out of the subsidiary. As intimated earlier, we have received a composite license from insurance regulator IRDAI to distribute life, non-life and health insurance policies. Our insurance distribution team is already in place and we expect to generate a gross insurance fee income of at least rupees 1 billion between FY25 and 27. This will contribute significantly in strengthening our ROE structure and support our target of crossing 15% ROE by before FY27. I shall now turn the commentary on business and earning performance. Capri's performance across all verticals continued to be strong during 9-month FY24 with overall AUM growing by 54% year-on-year to rupees 13,360 crore rupees. The overall disbursement during the 9-month FY24 increased by 113% year-on-year to touch rupees 9983 crore, assisted by adding 311 branches on a year-on-year basis, taking the total branch count to 920. The growth momentum was strong across all verticals. Gold loan AUM grew by 235% year-on-year to rupees 2394 crore, partially supported by addition of 298 branch year-on-year basis, the gold loan specific branches. Home loan AUM grew by 53% year-on-year to rupees 3490 crore, driven by growth in disbursement by 48% year-on-year to rupees 1145 crore for 9-month FY24. Construction finance AUM grew by 35% year-on-year to rupees 227 crore, driven by growth in disbursement by 33% year-on-year to rupees 1347 crore for 9-month FY24. MSME loan AUM grew by 24% year-on-year to rupees 4768 crore rupees. On the back of a strong business momentum during 9-month FY24, the company is targeting to clock in FY24 AUM growth of about in the range of 50% year-on-year basis to 15,000 crore rupees. The strong momentum in AUM growth, along with a strong thrust in fee income, drove 59% year-on-year growth in the total net income. Supported by focused collection effort and active monitoring of the book, gross stage 3 asset have shown a decline of 20 basis on a year-on basis to 2.1% in third quarter FY24 versus 2.3% third quarter FY23. Our car loan distribution business is on course to originate rupees 10,000 crore business in FY24. On behalf of 8 commercial bank partners during 9-month FY24, the company originated car loan to the tune of rupees 7,073 crore, which is up by 83% year-on-year basis. Net fee generated was rupees 81 crore in 9-month period for FY24. The company is confident of crossing its set target of 10,000 crore, that is growth of 75% year-on-year by FY24. To further scale up the car loan origination business in FY25, CGCL is planning to build a tech platform and transfer the entire business to a newly created wholly owned subsidiary. We also have a plan to build an insurance platform, as I told earlier. CGCL has an active client base of 300,000 customers as of December 2023, of which about 137,000 customers were added in 9-month FY24. With a strong momentum in the retail lending business, the company aims to take an active client base to 400,000 by the end of FY24 and 800,000 by the end of FY27. CGCL's rapidly increasing client relationship offers a sizable captive base to cross-sell and improve insurance penetration. This will help CGCL strengthen its insurance cross-sell income and deliver about 100 crore fee income, which will generate about ROE about 2% in the span of the next 3 years. If you talk about our cost-to-income ratio, which is declined 392 basis quarter-on-quarter and 651 basis year-on-year to 63%. In absolute terms, the operating expenses were unchanged quarter-on-quarter to rupees 2,203 million. The flattening of OPEX in Q3 FY24 is in sharp contrast to the steep increase we have reported since the launch of our gold loan business in Q2 FY23. The flattening is also on account of the pause we have taken in our branch expansion since it is completed as planned. As a result, the reversal and decline in cost-income ratio shall continue with the gold loan business slated to break even in Q4 FY24. Owing to a strong net income performance as well as the flat operating expenses, our pre-provisioning operating profit touched to rupees 1,296 million, increasing by a robust 19% quarter-on-quarter and 78% year-on-year. This also allowed us to not just comfortably absorb incremental ECL provisioning requirement on account of higher NPA, but also improve the provision coverage ratio. Now I come to the credit cost and asset quality. Our GNPA ratio increased by 80 basis quarter-on-quarter to 2.10, although it remained 22 basis lower on a year-on-year basis. In absolute terms, the gross NPA pool increased by rupees 361 million quarter-on-quarter. MSME contributed by rupees 148 million to the increase, while CF and housing contributed rupees 106 million each. Some of the increase in MSME and housing NPA was a result of the flow from restructured assets, which are now fully out out of moratorium since Q2 FY24. The standard restructured assets stood at 92 basis of on-book AUM compared to 113 bips to Q2 FY24 and 176 bips in Q3 FY23. Our legal and collection teams expect to resolve a chunky of legacy NP and MSM in housing during Q4 FY24 with a minimal haircut on the net outstanding. In construction finance, we expect to resolve nearly 25 million of Q3 FY24 slippage during Q4 FY24 and the remaining rupees 81 million in the next financial year. Of the rupees 160 million slippage from the construction finance during Q1 FY24, we are happy to share that the stress project has been approved, funding from a stress asset fund of the Government of India, Swamin Fund, and the same is also likely to be resolved during FY24 with the likelihood of a full recovery. Our credit cost for Q3 FY24 stood at rupees 403 million or 1.25% annualized as per the percent of average AUM. The increased credit cost was both as a result of higher NPA flow as well as for the improving the provision coverage ratio. You may recall our guidance during Q2 FY24 conference call wherein we had indicated our target of gradually improving the PCR and stabilizing it around 37-40% level. Our PCR improved 243 basis in Q3 FY24 to 34.7%. Despite our focus on improvement on the PCR, which will continue in Q4 FY24, however, our full year credit cost in FY24 will remain in the range of 1%, which has been our long-term average credit cost. We have reported a net profit of 680 million, which is higher 82% year-on-year and 4% quarter-on-quarter. Excluding the loss incurred in the gold loan business, our net profit would have been 803 million. We have reported 2% ROE and 7.3% ROE in Q3 FY24. Our earning performance during Q3 FY24 can be termed as being resilient. Our efforts at diversifying our business and income stream over past 2-3 years are now beginning to support us meaningfully as seen in Q3 FY24. We have coped up with a decline in spreads and increase in credit costs for 2 consecutive quarters but reported a stronger bottom line. As we break even in the gold loan business in Q4 FY24, this shall be once again strongly validated. Now coming to technology and ESG, our past 2 years we have been preparing to establish a systematic ESG practice internally. Among the exercise undertaken was preparation of a materiality and gap assessment report with help from a Big Four consultant. We are moving ahead to obtain ratings under leading global ESG framework. Our board in the latest meeting approved 8 ESG-related policies in setting up an ESG governing framework through a dedicated ESG department. Our new board inducts also reflect our orientation. Going ahead, we shall periodically keep our stakeholder updated on the progress we make on ESG assessment. Technology has been another critical area for focus for us where a number of initiatives in the revamping our LOS, LMS collections technology, process re-engineering, and analytics-driven decision-making have been implemented. Very soon, we shall be announcing launch of our exclusive co-lending platform that shall smoothen the co-lending process. In coming months, we shall complete implementation of Oracle FlexCube LMS for our MSME business. In-house applications developed to improve login to disbursal tag shall start delivering us tangible cost saving from FY25 onwards. We look forward to regularly sharing qualitative outcomes of our tech initiative in a couple of quarters. With that, I conclude my remarks and we shall now take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Hitesh Jain from Avagra Capital. Please go ahead.
Hi. Thanks for taking my question. My first question is on the gold loan business. I think at what level at a branch level, does the branch need to do business in order to break even? And currently, how many branches are at that break-even level? I'm assuming there are a lot of new branches which may be incurring losses. So how many branches are already at break-even level? That's my first question.
So we start breaking even. Currently we have about 747 gold loan dedicated branches which only book the gold loan businesses. And currently out of 3 crore rupees per branch, we start breaking even. So out of 747, give me a couple of minutes. I will tell you how many branches are 3 crore and above. There are some branches which have even crossed 5 crore rupees, so they are reasonably good profitable. But exact number, give me a couple of minutes. Meanwhile, we can take up another question and then come back to answering your question.
What if a branch doesn't reach 3 crores? How much time do you all hold on to it and you decide, okay, fine, let's shut this branch?
So normally to reach the branch at 3 crore, depending on the location to location, every branch doesn't have the same formula. Some branches reach 3 crore within 12 months. Some branches have taken even 15 months. And some of the branches are going to take 18 months to reach that.
Okay. Have you all closed any branches?
No, we have not closed any branches.
Okay. And what is the cross-selling opportunities at these branches, the gold loan branches?
So, all we know, there is an increased awareness about the insurance, and so every gold loan branch have capability to sell the insurance policy to our borrowers. Now, the customers, when they come in, sometimes even gold loan customers, it is very easy to explain them and convince them that they take an insurance policy which take care of their mediclaim and hospital bills. And that policy will cost maybe about 5,000 rupees per year. But we explain them even next 10 years they get admitted for any reason and any of their family member, even twice, they will be able to afford good treatment. At the same time, it will turn out to be cheaper. So with that connection, we have started selling insurance policy already. And I think from the year April onwards, there is a focus that we should generate about 30 crore rupees a year insurance policy premium income, out of which a significant portion of the commission will accrue to us. So it is very easy. So we are targeting our cross-sell. Our technology is already being in-house made for that. And this corporate agency license is already active now. So you will start seeing the traction. I think Q4 we should be able to report the specific number on the insurance income earned from each segment, be it gold loan, be it MSME, be it home loan, or be it construction finance. Okay. It is going to be a very sizable income next year onwards.
Okay. Sure. So just continuing with this question on the insurance, in your opening remarks, you mentioned that you will touch a ROE of 15% with the help of insurance. Can you just elaborate more on that? How's that journey going to be?
So, if you talk about ROE, let us go step by step. First of all, this year our gold loan loss will be in the range of about 100 crore rupees. Next year, our gold loan vertical will start delivering profit. So this entire 100 loss will go away and we should turn into positive, where we expect anything between 40 to 50 crore rupees of profit contribution for the gold loan next year. So that is a 140 to 150 crore rupees upside from the current financial. Now, car loan distribution will continue to grow, and that is also going to give a good amount of fee income. If you say the gross revenue from car loan business comes in the range of about 2.3% on the volume originated. So this year, the gross revenue will be in the range of about 230 crore rupees from the car loan vertical. And next year, this business again should grow 20%. Even after all the expenses and the fee commission payment, we should be able to generate about 50 crore rupees of profit from the car loan distribution alone. Insurance side, by putting the dedicated people, team and license now in place, we should be able to generate an income of about 40 to 50 crore rupees again from the car insurance business. So the cross-sale is going to give us a fee income support from our customer base. And next year, we expect our number of customers to be in the range of about 800,000.
So by when can you achieve this 15%? Which year? I mean, next year or?
15% ROE we hope to achieve by around between FY26 and FY27.
Okay, sure. This is one last question from my side. So what was this rationale for making a separate subsidiary for auto loans?
Okay, now I got the data of the gold loan branch. Out of 747, 313 branches is already crossed 3 crore rupees. Plus 113 branches are already moved. We are already started contributing to P&L.
Okay, good. Sure. Okay.
Thank you.
Yes.
The next question is from the line of Rajat Roy from Investec. Please go ahead.
Hello. Am I audible?
Yes, sir, you are audible. You may proceed, sir.
Okay. Good afternoon. I just wanted to sort of get an understanding on the growth in the gold loan business at about 250% year on year with regard to AUM. Could you please shed some light on how this growth was achieved, as well as forward guidance for what we could expect with regard to specifically gold loans as well as the other business segments?
So if we talk about gold loan growth, this year, because of the new branches have been added about 298 branches in gold loan alone. On the back of that, it has started. We expect to close our gold loan AUM this year about 3,000 crore, and next year we should achieve a gold loan AUM in the range of about 4,700 to 5,000 crore rupees. So that is what our growth will come. So you can say next year gold loan business again will continue to grow in the range of about 50 to 60%. If you talk about our MSME business, which has grown about 24%, and our home loan business has grown in the range of about 50%. Next year, if you talk about overall growth, we are confident to achieve a growth in the range of about 35% plus.
Understood. Thank you. Thank you very much.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Gaurav Sharma from HSBC. Please go ahead.
Hello. Yeah, am I audible?
Yes, sir, you are audible.
Yeah, sir. Thanks for giving an opportunity. So, couple of questions, sir. So, a couple of NBFCs mentioned during their result that they are slowing down their co-lending disbursement in housing finance as they receive some directions or formulas from NHB to maintain certain threshold of home loans in their own book. So they are slowing down their co-lending disbursement. Just wanted to know whether you have also received such directions from NHB to slow down co-lending disbursement. That is question number 1. And second, sir, second on margin outlook, like we have seen the 40 basis compression in margin outlook. So where do you see that further margin going in FY25, and what will be the key drivers for sustainable margins?
So we have not got any direction to slow down co-lending or otherwise the home loan disbursal at all. On the contrary, now NHB is holding the meeting of all CEOs and key management every 6 months and asking them are they facing any difficulty or how they can improve the business, how the expansion. So I can clearly see it is a thrust of the government, it is a thrust of the regulator that how the first home buyer can be serviced by making the credit easily available. And now affordable housing, another plus point is that smaller houses are being getting built by developer because the people are started getting the loan. So we see this segment will continue to grow for next few years. And while we are growing at a 50% pace, I don't think next year we will be slowing down this segment. So this is one part. What was the other question? Other part of your question?
On the margin outlook, so how can you protect margin going forward, and what will be the key drivers?
So there are 2 ways to protect the margin. There are 3 things we will do rather. One is that we have currently got from the 6 banks co-lending lines. So co-lending line efficiently what they do is that 20% money you have to put 80% they do. We have got about 3,000 crore plus kind of a co-lending line. This will give us a ability to service even those customers we otherwise would have said no because the low interest rate. So it will help us to control the balance transfer to the competition. Plus, it will give us an additional layer of the customer we would have said no. And third, the gold loan contribution in the overall yield will continue to grow. Gold loan realized yield in the range of about a targeted yield for the next year in the range of about 18%. So the overall, our spread will continue to improve. Fourth, our fee distribution from the car loan business and insurance business will be additional support to improve the overall our margins.
Understood, sir. Those were my only questions. Thank you so much for answering.
Thank you. The next question is from the line of Satya Prakash Pandey from Haitong. Please go ahead.
Hi, am I audible?
Yes, sir, you are audible.
Yeah. So my first question is, could you please provide further details regarding our plan for insurance business? Specifically, what policies are we intending to launch, and what is the current progress regarding the establishment of team and infrastructure for this initiative?
So we are not going to be ourselves insurance company. We are just partnering with the existing life, non-life health insurance companies to distribute their product among our customers and earn the commission out of those cross-selling the insurance business.
Okay. Thank you for that answer. If I may ask one more question, just wanted to understand your distribution and network reach in car loan business. Capri's presence across location is actually constant at around 715 since last few quarters, and specific reason for not widening the presence. Additionally, I would like to understand how our new subsidiary, Capri Loan, Capri platform, will integrate into our existing car loan distribution business.
So this car loan distribution business, while we have about 700 plus locations where our employees are present, we have a DSA network about 1800 locations, and I can, with the pride, I can say that right from Jammu to Kanyakumari, we have a network either of DSA or our employee on ground. So there is no place left where if there is car loan business is happening and bank branches are there, we are not there. So we have already deeply penetrated in this, and that is the reason you can see that among the non-car dealer segment, we are the number one, and by far margin we are number one in that segment. This year we'll close to 10,000 crore rupees distribution, and next year we hope we are putting all efforts to grow that business by another 20% next year.
Okay. Thank you so much. Those are my questions. Thank you.
Thank you. The next question is from the line of Darshil Pandya from Fintree Capital. Please go ahead.
Hello. Sir, I just wanted to understand how will the cost of funds evolve in the light of restrictions on bank lending, and what is the expected lag between the increase in the cost and the pass through to the customers?
So recently RBI have also issued the circular where the risk weightage based on the rating have been increased, and the bigger increase have happened for the AAA companies and AA companies because flatly their risk weightage have been doubled. As far as we are concerned, our risk weightage have been increased only by 5 basis points. But however, cost of funds have become costlier as compared to 6 months ago. However, as far as the new lending is concerned, we are able to pass on that increase. Our existing portfolio, about 45% of the customer we are able to pass on. The rest we have to absorb it. So thereby you could have seen there is a little compression on the spread. But since gold loan business is going to increase in overall proportion, our spread will improve in the next year. Plus, lot of efficiency is being coming from our existing branches, and our technology initiative, where about 100 plus people's team in our in-house technology team, along with outside vendors, we are putting up our loan origin system, which will be launched in the April. That will bring a lot of efficiency in the TAT and thereby improving the productivity. So next year, a lot of things are happening where our gold loan branches are going to turn positive. Since we are not going to do more expansion in the gold loan, so that investment losses will stop happening, plus expansion of the scale up of the insurance distribution business, and all the things will see a lot of positive in the FY25.
Got it. All right, sir. Thank you so much.
Thank you. The next question is from the line of Kunal N. from MK Global. Please go ahead.
Happy afternoon, sir.
Yes, good afternoon.
Sir, my question is, your MSME contribution as a percentage of your total AUM has come down to, close to 35.7% from 44.5% a year ago. So are there any intentions to further reduce this contribution? And what are the strategies the company has in place for MSME business segment? And additionally, are there any plans to expand SME lending into new geographical areas?
So since we launched the gold loan new product and gold loan is increasing also, the overall AUM and percentage in the overall AUM and also contribution will come down. However, our MSME business, if you've seen, it has also grown about 24%. We are evaluating to utilize our existing branch network to launch the micro lab, which means the secured lending in the segment where ticket size is less than 7.5 lakh rupees is under evaluation. Once we decide which are branches, how to launch, then we set up the team. But that is in the active consideration. So that is where the expansion will happen. As far as the new geography in MSME is concerned, at the moment we are not thinking. Next quarter, which is the first quarter FY25, will draw a plan. But that is only at the consideration stage. We are not frozen yet. However, overall, MSME is going to be a key contributor because their tenure of the loan is 15 years, and that is a loan which gives a longer horizon of the income. So the rundown doesn't happen the way rundown happen in the gold loan. So so there's a balance happening by MSME, average customer life, despite tenure is 5 years. So I think that will continue to show a decent growth.
Got it. Thank you so much, sir. Just one more question. So after adjusting the gold loan vertical, the cost to income ratio remains slightly elevated at over 50%. What do you anticipate this? When do you anticipate this to moderate, and what would be a sustainable level in the near future? Hello.
So I think we should have excluding gold loan, our cost to income ratio should come down in the range of about 45%.
Okay. And by when are you expecting this to happen in the near future?
We expect that next year, because of the various initiatives plus technology, I think it should come down to the next year itself. You will see the traction in the first quarter FY25 itself.
Okay, sir. And this 45% would be a sustainable level, right?
I think we are hoping that once the technology phase 1 comes, then another phase 2 will come in another 6 months' time. And then we see clearly our productivity level is improving from the same manpower. So I don't want to give a number, but we are working towards to bring it down in the range of 40%.
40. Okay, sir. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Tanishq Makwana from Elara. Please go ahead.
So good afternoon. Thank you for the opportunity.
Sorry to interrupt, sir, but your line is not very audible. I request you to please use the handset and speak closer to the mic.
Can you hear me now?
Yes, this is much better, sir. Please go ahead.
Thank you, sir, for the opportunity and a very good afternoon. Sir, I would like to know what is the rejection rate for this quarter in our loans compared to FY23, and what would be, a credit top-up for the same?
Can you please repeat? We are not able to hear clearly.
So what will be the rejection ratio for the quarter as compared to FY23? And how are we, evolving in the filtering process? How are we, what is basically, on what basis are we accepting the consumer or rejecting it? And also, what will be the loan top-up amount to these, existing customers?
So you are asking for the which segment?
Sir, all. Like a blended on a whole level basis, or you can, give us segment-wise as well, that would be very helpful.
If we talk about our MSME in home loan, login to disbursement ratio is in the range of about 30%. Login to sanction ratio in the range of 40%, but disbursement ratio is 30%. And in gold loan, there is no login and disbursement because on the spot we decide whether to do it or not do it, whether the customer is accepting or whether we are rejecting the customer. So that happens on the spot itself. So there is no login and all that ratio.
No, so I wanted to know the conversion ratio. Like if 100 consumers are there, like what is your rejection ratio, not login rejections? Like how many do you reject and how many do you accept on the basis of what are you like? Do you accept the CIBIL of 700 or 750 or on the lines of that?
So if we are saying 30%, then 70 or 60% you can say rejection ratio. Because 40% get sanctioned, 60% get rejected.
Okay. Hello.
So does that answer your question?
Hello.
Mr. Tanish Makwana, do you have any further questions?
Yeah, I would like to. Yeah, I have one more question. So, where do you anticipate your ROA and your ROA and ROE for basically FY25-26? Hello.
Members of the management, if you are speaking at the moment, you are not audible.
Yes, so next year ROA we should be having in the range of 2.75 to 3%. And ROE should be in the range of about 11.5 to 12%.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Jai Dakshini from IIFL Securities. Please go ahead.
Yeah, am I audible?
Yes, please.
Yeah, thanks for taking my question. My question would be, what is the incremental cost of funds? And second would be, is the PCR increase based on overall level or...
The line for you is not very clear. Please use the handset mode.
Yeah. Is it better now?
Sir, you're not audible clearly, sir.
Hello?
Yes, please go ahead.
Yeah. What would be our incremental cost of funds for the quarter? And second would be, is the PCR increase on overall level or led by certain product segment?
So PCR increased at overall level, which is about 34% overall. And our cost of fund? Our cost of fund is overall about 9.3 for CGCL. about 8.3 for the housing finance company.
On the incremental level, right?
If you talk about the incremental cost of fund is about 9% for the housing finance and about 9.8% for the CGCL.
Okay. Fair enough, yeah. Thank you.
Thank you. The next question is from the line of Kunal N. from MK Global. Please go ahead.
Hi, sir. Sir, I just wanted to understand who are your key co-lending partners for gold loan, mortgages and SMEs?
So, for the gold loan, mortgage and SME are Yes Bank, State Bank of India, Union Bank of India, Punjab and Sindh Bank, UCO Bank, and Indian Overseas Bank.
Okay, sir. And sir, RBI has recently, shown some uneasiness in, digital lending, and they have also shown some concerns in co-lending space. Do you see any regulatory action on this front?
So, I don't think co-lending side RBI have any concern, because the RBI and banks are more keen to increase this volume for the purpose of making customers cost of fund going down. That is their sole objective. So we are seeing more and more line coming to us from the co-lending partners. As compared to last year, I think we have at least five to six times more co-lending sanction in this year. So we think co-lending is going to be the very acceptable and growing feature between the banks and NBFC partnerships.
Okay. Got it, sir. Thank you so much. That's really helpful.
Thank you. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah. So, thank you. So, if you have seen, all of you would have noticed that as a organization and the management, we have shown our ability to build the new businesses. In last 3 years, we have started gold loan, we have built the car loan distribution platform. Now we have launched this insurance platform based on the technology, and so we have shown as an organization successfully doing that. And I think gold loan business, in the shortest span of time, we have activated 747 branches. Now we are thinking about the micro lab, which is the same kind of a customer of a smaller ticket size, to leverage our branch network. So going forward, cross-sell and utilizing our existing customer base to reduce the cost-income ratio and to improve the margins will be the focus. And we hope with the technology focus, which has increased our cost-to-income ratio significantly, because we are spending a lot of money on the technology side, will come down in the next year. But the effort of the technology will be seen in the next year. So we are quite excited that FY25 hold a lot of hopes and a lot of good things which are translating into the better income and earnings. With that, I conclude my speech and address. Thank you so much.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.